Hello traders, welcome back to your FXCM YouTube channel. My name is David Londoño, I'm a trader and I also do market analysis. Today we're going to be talking about the primary markets versus secondary market. What's the difference between them? Now the primary market and secondary market are two key components of the financial markets where securities are treated. So here are the main difference between them. Let's start by talking about the issuance of security. In the case of the primary markets is where new securities are issued and sold for the first time. Companies, governments, or other entities sell securities directly to investors, while on secondary markets, it's where existing securities are trading among investors. So the issuer does not receive any funds from these transactions. That's the first difference between them. So let's talk about this more. So it's just existing securities, while primary, these are new securities issued. Okay, let's talk about the purpose of each. In the case of the primary markets, the main purpose is to raise capital for the issuer. The funds from the sale of securities go directly to the issuing entity, while the purpose on the secondary markets, the main purpose is to provide liquidity and an avenue for investors to buy and sell securities. It allows investors to easily enter and exit investors. Now let's talk about the participants. In the case of the primary market, typically involves the issuer, investors, individuals or institutions as well, and underwriters, usually investment banks that help the issuer sell the securities. On the other hand, the participants on the secondary market involves individual and institutional investors, brokers, dealers, and exchange. Let's talk about some examples. For example, the initial public offering or IPOs, where a company sells its shares to the public for the first time, and new bond issues are examples of primary market transactions. On the other hand, we have the Nasdaq, for example, on the secondary market. Stock exchange like the New York Stock, New York SE, and Nasdaq, where shares and bonds are treated among investors. Those are some examples of the secondary market platform. So in summary, the primary market is where securities are created and sold for the first time to raise capital for the issuer, while the secondary market is where the securities are subsequently traded among investors, providing liquidity and price discovery. That will be all for this video. I hope you like it. Don't forget to share, subscribe, also drop us a comment on this one, and I will see you on the next trading session, guys.